Hi everyone, today I'm just going to do a quick breakdown of gold. I'm going to show you how we do technical analysis, a top to bottom analysis from the weekly all the way to an entry time frame. This will take less than 5 minutes. Let's go ahead and get started. Gold XAUUSD. Search for it in the bar here. Gold. Once it's come up, you go into the weekly time frame. This is where each candle represents 1 week. You want to try and identify where support and resistance is on the weekly time frame. And you've got resistance here. You've got support here, where price changes from bearish to bullish, down to up, red to green. And because gold is at an all-time high, this is your resistance. You then go into the daily time frame, do the same thing again. Identify your higher high and higher low. Higher high, higher low, most recent higher low. This is your resistance. Most recent higher high is where price is at the moment. You've got your 2 daily levels. So what can we do with this information? We know price, once it reaches here, it's at an all-time high potentially. We don't know if it's going to go up, but if it does go down, we know it's going to go at this level here. That's the importance of your daily time frame. It always gives you direction of where price is going for that day. You then go into the H4 time frame. You want to repeat the process once again. Get your rectangle tool out. Identify your higher low and higher high. This is a most recent higher low. I want to change that to yellow so I know what the H4 level is. H4 time frame, each candlestick represents a 4-hourly candle. As you can see, this is a most recent high low, that's a most recent high high. I've tracked the price between 2 levels. You then want to go into your intraday time frame, which is H1. This is the time frame that you use when you're trading on a daily basis. You then go into this tool here and get a fib retracement tool out. Same thing again, you want to trap the price between 2 levels. So here we've got a higher high, higher low, higher high, higher low, high, higher low. This is a most recent higher low. Drag it to the high high, where price is there. You then draw your rectangles, and here you've got your 2 H1 levels, and I like them in blue. Easy as that, guys. So you do this before the day starts. So when the London session opens at 8 o'clock, which it did, that's 9 o'clock. That's your 8 o'clock candle. You can see price is at a level. Price potentially going to reject it. Potentially going to reject it. We don't know. It could still go further up. You could use this reference line from the bullish engulfing candle. So you know if price breaches this candle, because it's quite a large bullish candle, then sellers into the market. So you could enter here. That would be an anticipational trade. A better trade, a confirmed trade would have been this one here. Then if you want your risk to reward tool out, you go in short position. Let's say you entered here on that candle. Your stop loss would have been above here, the higher high, and this would have been your TP. That would have been your setup on H1. So if you do that, you've got a risk to reward ratio of 7. You're risking 5 pips to potentially win 40 pips. And once you've done that and you want to reduce your stop loss, you then go into the M15 time frame. So you could have entered on any of these candles here. And your stop loss, you can't really reduce your stop loss even more. You just want to make sure you're not hit. Your stop loss isn't hit. And yeah, you could have entered the trade here. Could have entered it here on this bearish engulfing candle. You can see price retraced, forming another lower high. You could have entered here. So you got 3 entries. You got one there, you got another one here, put your stop loss there, 2, and then you got this one here, 3. 3 entries, and you'd be looking to see, you can add a trend line as well to see where price is going, just so you can visualize it even more. And you can take it from there. So yeah, if you're still in the trade, you're profitable. Once 5 o'clock comes, you can close the trade if it doesn't hit your TP. But that is how I would trade gold today, guys. And obviously a secondary indicator, which is this one here, the RSI, you can see it's over 70. Once it's over 70, you know it's overbought, so price could be going down, which it is now. So I hope you enjoyed the session, guys. That is just a quick breakdown of technical analysis from gold, from the weekly all the way to the entry time frame. Took me less than 5 minutes. Just try and repeat the process. Once you get used to it, it becomes second nature. You can do this while you're working at your job. Hope you enjoyed the session, guys. Like, share and subscribe.